Hello, ladies and gentlemen. It's a modern investing on Pod TV. It's a last show on the last day of 2025. My name is Sasha Starr, and my guest today is Jim Ead from Ead Foundation. Welcome to the show, Jim.
Hello, Sasha. It's great to be here and hope you had a wonderful 2025 and 2026 is going to be even better for you.
Hopefully, yes, yes. As usual, a lot of people are waiting for correction or some kind of recession, and
Yes.
all of the above. And but we'll see. Market has its own way to deal with all these doomsayers and skeptics and depression seekers. We'll see. Today is very uneventful day. Very low volumes. Last day, it was all the week: Monday, Tuesday, Wednesday. Really, there's nothing much happening. So I haven't did any trade. Just I think yesterday I added a new stock. At least I haven't done it before, but decided why not? Let's try how it works. And the stock is QBTS. QBTS. It's a D-Wave Quantum Incorporated. It's one of those quantum computing stocks.
Right.
It went down quite a bit recently, so I think that if there will be some kind of a January rally or whatever, it may go higher. And so I have very small position, about 100 shares, just to try it out to see what's happened.
I
Other
do
than
that
that, I
too.
haven't
Yeah.
done nothing. What about you, Jim?
Yeah. I do that strategy is if I'm interested in, but I'm not ready to commit, I'll buy a lot, which is 100 shares.
Yeah.
And so I say, don't buy a lot, but I buy a lot.
Mhm.
And the that just keeps some skin in the game and keeps me interested in the stock. I haven't done anything this week either. I've taken the holidays off. But I am interested in what the Fed is going to do next year regarding interest rates, and I'd love your opinion on it. I know that the Fed is reported to be very divided internally, and interest rates, of course, they lower interest rates, and that helps the American consumer, the buyer of new cars and new loans for anything, that sort of thing. But unfortunately, under the Trump administration, more people are looking for jobs, fewer jobs are available, and inflation remains sticky. So what the Fed is doing is reluctant to lower rates because of the prospect of inflation. And so, this is going to be one of the things that will help the market rally if the Fed does lower rates. But, they've done it three times at a quarter point each time in 2025. Whether they will continue that or not, I know the market expects them to, but I'm thinking that there may be some disappointment in the near future.
True, I agree with that. Remember that what we're talking about interest rate cuts, we're talking about short term interest rates, like up to 10 years.
Right.
One, two, three. And the longer interest rates, they're controlled by the market forces, which have nothing to do with Fed. So if that rates will continue linger higher, and most likely they will because of the US debt,
Right.
um, so and interest on the short term will go down, or at least market expects them to go down. So there could be a huge disconnect between short term rates and longer term rates, and I'm not so sure how the market will react on that. So they will feel that probably the short term are artificially low because higher, the longer rates are
Right.
much higher. I'm not so sure that it will work out really well. I think
Right.
the market will not react very positively, and there is nothing to look forward that long-term debt of U.S. will go down anytime soon. I
I
don't see
agree. I
it.
agree. The bill that they're thinking of passing will put some people money into some people's pockets when they file their tax returns, but still does nothing to address the runaway U.S. debt, and in fact will increase it based on multiple people's analysis of it. So this again is very questionable. It might help people get certain people to vote certain ways, but in terms of the federal debt, it's going to be harmful. And and I still think the effect of the tariffs are just beginning to be felt, where people have less choice at the grocery stores or at the car shops, and higher prices. And people are feeling an affordability pinch. Things just don't seem as affordable as they were, and they're right. It's not just in their imaginations. It's true that things are becoming less affordable, and so the twin thorns of availability and affordability are pricking at the American people's conscience. And I think that in 2026, it'll be very interesting to see how the midterms play out, whether or not that's a consensus that is built throughout the 50 states, or whether that just seems to be something that people will shrug off.
Well, now we are looking into January effects. Now it's quite interesting is that so supposedly a big money will move into the market, not I don't believe on Friday, but Monday next week. We're talking about the 5th of January. Market will come back to a normal. And what that's going to be normal? Do you think it could be downward movement, say 700 down on the Dow, and or move up 500 points? What do you think will happen on Monday?
Yeah, I do think that the January effect has been historically positive, and I do think that that may be true this year as well. But what we're talking about are things of not long-term concerns, but short-term concerns. And I think that the market will be unsettled sometime. So maybe, if we look out to February, I think at some point we'll see a dip. I don't know how deep the dip is, but that's why you should have a cash position as well, because I think buying the dip has been a very good strategy for 2025 and will be again in 2026, because there are things like when Trump announced his tariffs, for example, the market went down. That was an excellent time to buy.
Yeah.
And something like that may happen again, where there will be a rapid decrease in the overall value of the stock market, and but not because of fundamental economic conditions, but because of some political policy or some announcement or something like that, where the market gets unsettled. And then if you're poised to buy, and not just any company, of course, but a good company in an area that you're familiar with and know what's going on, and if you have confidence that there are future revenues that are going to be generated, buy the dip. And so I'm going to be I have enough cash to be ready when that happens, and I think it will happen no later than the end of February.
Okay. Right now, at least I'm at point where I don't have any high conviction of one way or another, and I think that for me at least the actual way of making money is selling covered calls,
Right.
selling puts, cash secured puts. And the only thing, normally I'm very aggressive in selling, for example, if NVIDIA is $180, I would sell $200 puts. However, I'm taking expiration date, for example, September next year. So it gives me a long time before the expiration. And the premium is juicy. We are talking about $50, $60 for one call. So if you're selling 5 calls, you're making serious money, and you have a long time to be right. So even if at the beginning you will be wrong for a month, 2 months, but with a stock like NVIDIA, there are good chances that it will be $200 or higher by September.
Uh-huh.
I really think so.
Yeah.
Here I have conviction.
Yeah.
Conviction. If you ask me what Nvidia will be by September next year, $200 or more, I will definitely bet that it will be 200 or more by September.
And Sasha, you'll know this. I read something about NVIDIA and Taiwan Semiconductors. They made some sort of deal. So they took either a position in TSMC or uh,
Mhm.
some kind of uh, guarantee of chip making, and the target is chips for China. And so it may be a way to circumvent the tariff kind of situations where they're going to Taiwan to go to China. And
Yes, yes, I agree. Listen, the management of NVIDIA is very, very strong, very practical, very business minded, like no nonsense approach. So I think that anybody can be very secure. And as I said, there are a lot of downside predictions that go down as much as to 160, even $150 a share. Yeah, if an event like Liberation Day in
right.
April this year, yeah, it could happen. And then what? It's not going to stay there. So
No,
what I
people, that's a
think,
buying opportunity.
if you remember the first half of 2025, 150, it was a barrier, it was an unmovable object. It was resistance, call it any way you want. It couldn't
Right.
go to 150, down to 135. Once it went out to 153 and closed. So I said, okay, now you need conviction and continue to 160. No, it went down back to 138 now. And finally, when it broke through 150 and went to 176 and higher, there was no return anymore to 150. So even if I consider long-term support is definitely at 150, it will not go lower, which is true. But question is, will it go that low as to 150? I don't think so. It's possible, but I don't think so.
Right. I think the odds are against it. I think that NVIDIA will be at some point rewarded. They will report eye-popping revenues as they have consistently done again and again in 2026.
Now they
Um,
can report at the end of February.
I think there's going to be a dip, an overall dip in the market by the end of February, which will present myself with a buying opportunity. And if NVIDIA is punished down to 150, I'll buy it again.
Yeah,
I
absolutely.
bought and sold, and I'll do it again if they give me that opportunity. I will be prepared to take it.
Actually, interestingly enough, I have a large position in NVDY, which reported today a pretty good dividend. I think it was 14.35, 14,
Hmm.
14 cents and 35 hundredths. And also another position I have, GGXY, which reported pretty good dividend today, uh, close to 16 cents a share. So this are working quite well. So because of the NVDY, I sold recently, a couple of weeks ago, I don't remember. I think I sold at 188, I believe. I sold a couple of hundred shares of NVIDIA that I had and replaced it with, mm, I think I mentioned 200 puts of September. Yeah, I
Right.
sold 200 puts, collected 30, almost $40 per each put, and they're now down to $32. So I'm already in a little plus, about $1,500. But I think they will expire worthless, most likely.
But you have the premium. Yeah, and you have me looking at gold ETFs, and one of the things I noticed was an ETF called GLD. It was up 65% in 2025,
Oh, it
and
will go higher.
it makes sense that people, when they get jittery in the stock market, gold is one of the things that they tend to go to. And so there were plenty of jitters in 2025, and so gold did very well. And ETFs, exchange trade, they seem to be the play for many people who aren't going to be monitoring individual stocks on a regular basis. And past performance does not predict future performance, but I still see gold as being attractive to people whenever something turbulent happens in the marketplace. And I think 2025 was pretty turbulent, not greatly so, but still there were plenty of anxiety, moments of anxiety, periods of doubt and lack of confidence, let's put it that way. And I think 2026 is going to be that. And plus, there's going to be an election that people will get antsy about. And so I think that, again, buying the dip is one of the things, and maybe having a position in a gold ETF makes a lot of sense to me.
Jim, but if you like gold, you must love silver even more.
Yes, silver's. I have not even tracked silver, but you have me tracking gold.
Okay, I track both gold
Yeah.
and silver, and I'll tell you, I see even more potential in silver because historically, if you take correlation between gold price and silver price, it's now historically it's what around like 40 or 35 to 40. Now it's about 100.
Right.
So
That's
but
substantial.
gold went big time higher, and
Yeah.
silver, I think it will have to do a lot of catching up. And silver is in its right. It's quite
Yeah.
interesting position.
And Mark, our producer, has often mentioned copper, and copper is an interesting play. And for a reason that I didn't know, the first time he mentioned it, I didn't think about this, but copper is essential for the data centers that are being built to support AI. And
True.
AI is still going to be, just soaring in demand. And the data centers that are being built now require copper. And so I think that copper will also do well. And I also am very interested in rare earths, even though they may not be that rare. There are few places that have the processing power to turn them into the materials that are required for chip making and the other things that our society has come to depend on, including our little phones that have more processing power than the mainframes that I used to work with at your disposal.
True. Jim, I'm still not strong believer in all the story about data centers because there are a lot of issues unresolved, or at least partially unresolved, such as a cooling problem, it's supply energy problem, and it's all. Some of it will be resolved, most likely. Some of it will be partially resolved, or some of them will be not resolved at all. So, what do you think? How it affect all the story about data centers?
Yes, one of the things that I have, and I think your concerns are legitimate. Because they require a great deal of energy, and where is that energy going to come from? And in my analysis of the situation is that there's so much money involved right now that we're talking many billions of dollars, and that when that kind of money is involved, these problems get solved. There's a will to solve that problem. There's the money behind it to do it. And even though the Trump bill is cutting support for solar and wind are going to be part of the energy solutions, because they're building data centers in deserts, and including in Israel, including in Arizona. But so how do you produce? There's no hydropower there, obviously, but there is solar power, and there is also wind power many times. So there is going to be a variety, and we may see a renaissance in the nuclear power. I don't know, but these problems, and they're legitimate problems, they have to be solved. I have confidence that the amount of money behind it will come up with creative solutions to solve the problem, and the data centers will get built. and they will support the increasing demand for artificial intelligence, the applications that require artificial intelligence, and they will change our lives in ways that are yet to be predicted. They will cost us jobs, and they will create new jobs. Unfortunately, I think they will cost more jobs than they create, and there will be an adjustment period as we adapt to the demands of the new society that's going to be resting on artificial intelligence. The type of things that where we type into our phones a sophisticated question that gets a sophisticated answer. And, you know, the information, what there's a lot of data out there, but there's a lack of information, and the artificial intelligence will be taking the data, more data than we can absorb. They can absorb the data and turn it into information that we can absorb. And I think the biggest impact will be on the medical health field, but there will be many applications. Some of them we haven't even thought of yet.
Absolutely. So the young people, whether they finished high school or university or they didn't, they must be practical about what they're going to do with their lives and where they're going to get the money. In my opinion, it's areas like personal grooming, providing services to older population, being physical trainers, and massage therapy, but all other practical little jobs. You're not going to be a millionaire anytime soon, but you will survive. You'll be around. You will be able to get married and get children and buy a little house here and there and so on. And you will survive. That's the most important thing in this economy, is to survive. Because those people who will send 5,000 resumes a day, hoping to find high-paying jobs. You know, there is a secretaries in the companies who receives this resume. They normally put a large garbage can very close to where they sit, so they will immediately get all these resumes from their table right into the garbage can. So convenient. And then people, after the job, after 5 o'clock, they will take this garbage can to another location, someone to empty it and bring it back. So I think it's almost impossible to find a job. And there are more and more people who are finishing their university courses, getting their diploma, and they don't realize that they will be useless.
And the other thing is they've often gone into debt to get their advanced degrees. And the Biden administration helped support and ease the burden of the debt that they incurred. But the bill that Trump is going to pass is going to take that away in large part, reduce the ability for them to, be given some forgiveness in their payback. So being required, they're threatening to debit their bank statements, and take the money away from people rather than wait for them to pay it. So their burdens will increase under this. They haven't yet landed a job that's going to help them pay off the debt, and their debt forgiveness is going to be squeezed, and they're going to face some difficult times. And also, this young but aging population is going to want to buy homes, and home prices still seem to increase. There was a lot of home building in 2025, people expecting to be able to sell them, to turn them around. But the prices that they're charging have been too expensive for people to buy into. So I think the home builders were a little bit disappointed in 2025, although that's not my area of expertise. That's what I've been reading. And I think that's going to continue in 2026. There's going to be still price pressure when a home comes on the market. Only the people that can afford to buy, in other words, if they're selling their home to buy another home, are going to be able to participate.
Also, another area where people could prosper and do quite well, believe it or not, is the real estate as it's practiced by Trump and his real estate friends and relatives, Witkov and Kushner. So, most of the transaction, I don't know if you experienced yourself in real estate, normally they are done around like 2 o'clock past midnight or 3 o'clock past midnight. Why is it happen? What's the phenomenon? Phenomenon is very simple. Let's see, the real estate team of two people, one is working with a buyer and one with a seller. So they are okay. They're doing all kind of reasoning. They're showing the house. It's kind of a low key, a slow movement process. But then it's becoming a point when they're bringing one side down, another side a little bit higher. So then there's still, let's see, $5,000 still unresolved. So then they're starting high pressure tactics where they have meetings almost every half an hour. Okay, I'm coming to your house. Okay, we'll do this. Another side, okay, I'm coming. We're gonna do it. The other side is already done. Okay, we just have to sign and it's done. It's not done. It's nowhere even close. But then they're saying, okay, we are still $3,000 apart. What is $3,000 on a 50 years mortgage? It's nothing. We're talking about $85 a month, maybe even less. Okay, let's do it. Sign right here. Just sign it. You do sign, and it's going on until 2 or 3 in the morning. And finally, people sign not because they are convinced that it's really good deal for them. They want to get rid of these idiots because they stand this horrible pressure. They just give up. That's the end of the story. That's what Trump and his team is doing now with Ukraine. And we're close to it. It's 90% done. It's there. What is done? The territorial question, which is the remaining 5 or 10%, it's not done. Ukraine never will agree to turn down the territory. So now they came up with a new thing. Putin accused Zelensky that he sent drones to kill him in his residence. So the question is, and all 91 drones, they were all liquidated. So if you liquidated 91 drones, at least one or two, you can find remains of these drones and show this is Ukrainian-produced drone or American-produced drone or anybody else.
Yes.
This no, Putin said something that no proof is required. It's done. That's now we are going to, apparently there is definitely agreement of Putin and Trump that Zelensky is a major obstacle on capitulation of Ukraine. And if he would be liquidated, then there would be a deal done almost in half an hour. So this is Russian pretends that there was actual attack, so to prepare the world to the liquidation of Zelensky. I don't see it any other way. So we are taking a full circle from real estate deals to the plot to kill Zelensky, unfortunately. But that's the reality of today's politics.
You're the expert in the Ukraine matters. But what I understood was that Trump had a good meeting, a productive meeting with Zelensky. And while Zelensky was flying home, Putin called Trump and said that he had bombed his residence, and that made Trump furious. And I think that this is just another example of Putin knowing how easily Trump can be manipulated, and taking the opportunity. He's getting a report that the meeting went well with Zelensky, so I'll give him a call. I'll turn him around again.
When people are discussing that the meeting went well, what was exactly resolved?
Right.
What are the actual results?
What are the action items?
Zero, absolutely. It's a kind of a dance. I think it's going to go on until at least the end of January, because the Nobel Prize Committee, they close the year by as end of January. So I think Trump, even if there will be no peace arranged, but there is a spectacle that it's almost arranged. It's already arranged. It's going to be arranged in next 25 minutes. It's already there. It's going to be signed, not today, tomorrow, because of the time difference of the time that the deal will be delivered to Moscow. So he will sign on February 1st and I will sign on February 2nd or vice versa, and just keep talking about it and flying back and forth. And okay, here is a Vitkov, here is a Kushner, here is this guy, here is that guy. Oh, you want to see that guy? Here is that guy, and here that guy is over there.
When are they going to get sick of all the pressure and sign?
That's really what's going on. So I think that people who will be involved in the real estate, if they will learn something from this process, I think they could do quite well. Not so many people are so obnoxious to pursue this horrible career.
Right.
That either you're going to be one of 5,000 making, or you're going to be one of 4,999 who will not make it and get sick and tired of this garbage. Really.
Yeah.
This is really garbage job. But some people enjoy it, some people are making it.
Yeah.
If you take we're in 21st century, so what's the problem to have some kind of information with all the houses listed at what prices or so on, and just do search on your own and figure out what exactly you need, what you want. What do you need real estate in the first place? Frankly, I don't know, but I think it's still going around, and people really working with this. Okay, it's their business. Good luck to all of them, and good luck to all of us and all our listeners in 2026. And hopefully market will allow us to celebrate and do our best. And with that, I would like to thank you very much, Jim, for today's program. And we'll see you next week, probably
in 2026.
2026, and we'll see what is the January effect of this year going to be all about.
All right, Sasha. I'll see you then, I hope. And blessings to you until then. Bye-bye.
New year. Bye-bye.